The stock market has been on a roller coaster lately. Between rising interest rates, inflation concerns, geopolitical tensions, and fears of an overheated AI bubble, many investors are feeling uneasy and wondering if the best opportunities have already passed. Sentiment has shifted fast, from euphoria to caution, and some of the biggest names in tech have already priced in sky-high expectations, leaving investors nervous about what's next. But here's the thing. Amid all this fear and uncertainty, Wall Street is overlooking a handful of AI stocks that have been unfairly beaten down. In today's video, we're cutting through the noise. We're going to highlight 3 overlooked AI stocks outside of Nvidia, companies that have quietly positioned themselves at the core of AI's next growth wave, yet their stock prices don't reflect their true potential. These stocks are trading at attractive valuations, not because their businesses are broken, but because the market is too focused on short-term fears to see the long-term opportunity. Let's kick things off with the first AI stock on our list, one that doesn't just ride the AI wave, but powers it at its very foundation. ASML, holding NV ticker ASML. ASML is the undisputed king of semiconductor lithography, a company without which the AI revolution simply wouldn't be possible. It holds a monopoly in extreme ultraviolet EUV lithography, the cutting-edge process that enables the production of the world's most advanced semiconductors. ASML commands an impressive 90% market share in deep ultraviolet lithography and is the sole provider of EUV machines, a technological feat that took over a decade of research and development to bring from theory to reality. Without ASML's technology, leading companies like Nvidia, AMD, Amazon, and Google wouldn't be able to manufacture the high-performance chips required to power AI models. What's even more impressive is that ASML isn't just holding its ground, it's expanding. Currently, ASML's revenue accounts for just 2 to 3% of the total semiconductor market, but that figure is projected to double to 4 to 6% by 2030 as EUV adoption accelerates. With the semiconductor market expected to hit $1 trillion by 2030, ASML is on track to generate 44 to 66 billion euros in annual revenue, with gross margins rising to an impressive 58%, comparable to consumer giants like Coca-Cola, despite operating in high-tech manufacturing. Recently, ASML's stock experienced a pullback, creating a rare buy-the-dip opportunity. Its long-term growth potential remains firmly intact, and as the demand for faster, more powerful chips grows, ASML will continue to be the invisible force behind the biggest tech breakthroughs of our time. Next up is Micron Technology Incorporated, ticker MU, a company that's quietly emerging as the unsung hero of the AI revolution. While Nvidia and other AI chip makers often steal the spotlight, Micron is building the critical foundation that enables AI's explosive growth. The company is at the heart of the AI-driven data center boom, supplying high-performance DRAM and NAND memory that AI models rely on. Without ultra-fast memory, GPUs, TPUs, and AI accelerators simply wouldn't function at scale. Demand for memory is surging, and Micron's latest HBM3E product line is ramping up to meet that demand. In Q1, Micron's data center revenue skyrocketed by an astonishing 400% year-over-year, a clear sign of how AI is transforming its business. Despite this momentum, Micron's stock recently pulled back, primarily due to a temporary dip in Q2 earnings guidance. But make no mistake, this is a golden buying opportunity before the market catches on. Micron's gross margins are improving as memory prices stabilize, and management has already projected revenue acceleration in Q3 and beyond. With potential interest rate cuts expected in the second half of 2025 and easing trade tensions on the horizon, Micron's valuation could surge. Currently, the stock trades well below its peak, yet analysts see 25% to 50% upside in the next 12 months. AI-driven demand is fueling what could become Micron's most profitable upcycle yet, making it a must-own stock for anyone who believes in the long-term growth of AI. Rounding out our list is Marvell Technology Incorporated, ticker MRVL, a company that has quietly become one of the biggest AI infrastructure players. Yet its stock is down nearly 30%, despite delivering solid earnings and a strong growth outlook. This isn't just an overlooked stock, it's a classic market overreaction waiting to be corrected. Marvell's AI-driven data center revenue soared 78.5% year-over-year, with AI-related sales now accounting for over 50% of its total business. The company has positioned itself as a key supplier of custom XPU AI accelerators, designed specifically for hyperscalers and cloud giants, enabling them to optimize power efficiency and performance. This segment is projected to continue growing at an impressive 77% year-over-year pace in Q1 of fiscal year 2026, proving that demand for Marvell's products remains strong and is accelerating. To sum it up, while Nvidia may be leading the AI conversation, companies like ASML, Micron, and Marvell are the ones powering the infrastructure and technology behind the scenes. Each of these stocks is trading well below their true potential, offering a rare, buy-the-dip opportunity for long-term investors looking to capitalize on AI's next growth wave. Don't just follow the headlines, look beneath the surface and you'll find the real winners of the AI revolution.